Hello, my name is Andrew Naylor. I'm the ASEAN Executive Director for the World Gold Council, which is the international market development organization for the global gold industry. We do a number of things, one of which is working with policymakers and central banks here in the region and across the world when it comes to gold reserves management and the regulatory treatment of gold. Gold plays a huge role in ASEAN. In Vietnam and Thailand and Indonesia in particular. It's a major source of household finances. It's used as working capital. It's a savings product for many in ASEAN. And here in Singapore, it's seen more of an investment product. So there's a vibrant investment market where institutional investors allocate to gold and see the benefits of an allocation to gold. So gold plays an important role in ASEAN finances. And one of my jobs is to work with regulators and finance ministries and central banks to create an optimal environment for the gold market. Well, just today, in nominal terms, gold is at a record high. It's broken the $2,000 barrier. There are a number of reasons for that, mostly linked with COVID. First of all, increased uncertainty. When you have lots of economic and financial uncertainty, you have renewed investor interest in gold. It's seen as a safe haven, it's seen as a hedge against risk, it's seen as a source of emergency liquidity, and as we know this year, it's also a source of return. It's up by over 29% year to date this year. So the first factor is increased uncertainty. Obviously, a big catalyst for that has been COVID, but there are other issues as well. Long-term geopolitical and trade issues come into play as well. The second issue is to do with the interest rate environment. Real interest rates in particular in negative territory. In that kind of environment, investors are also increasingly attracted to gold because the opportunity cost of holding gold goes down when you're in a low interest rate environment. So those are the two main factors. The third is a bit more technical around price momentum. But in terms of COVID, the big impact has been, one, increased economic uncertainty and the need for investors and individuals as well to protect themselves. Well, it's been one of the best performing assets so far this year. As I said, it's up over 29%. So compared to most other mainstream assets, it has outperformed. One of the reasons for that, again, as I said, is increased uncertainty. When you're in an environment of sort of financial malaise and economic uncertainty, you see that renewed interest in gold. Investors are attracted to it for four main reasons. One, it does generate returns, as we've seen this year. Secondly, it's a source of liquidity. So over $145 billion of gold is traded every single day globally. London still dominates the gold market from an OTC perspective, and then from an exchange traded perspective, you have COMEX and you have contracts in Shanghai and other markets in the world. But globally, it's a very liquid asset. Also, it's seen as a hedge against risk. It's seen as a good portfolio diversifier. It performs very differently to other asset classes. So when investors are looking to diversify their portfolios, they want an asset that doesn't behave like other asset classes. So gold is seen as an effective diversifier. So for all those reasons, we've seen this renewed interest in gold, and that's been supportive of gold's performance so far this year. From a World Gold Council's perspective, as a financial institution, or an institution that looks at financial markets very, very closely, I think greater, first of all, capital markets liberalization in some ASEAN markets. Obviously here in Singapore, it's very, very liberal and open, but in other markets less so. So for those markets that haven't perhaps opened up from a capital account perspective or a capital markets perspective, greater liberalization would certainly be welcome. But beyond that, greater integration of financial markets. So common definitions, interoperable trading systems, regulatory equivalence regimes, all of this will help create a robust and vibrant financial market, which will eventually generate and support economic growth across ASEAN.